Okay, in this problem we have a partnership, and the partnership is going to liquidate. Their balance sheet is here. The rest of the problem I just kind of summarized here because it wasn't couldn't get it to scroll from that picture. So Ryan, Peter, James, they split profits 3 to 2 to 1. Ryan 3, Peter 2, James 1. They want to liquidate. The property, plant, and equipment was sold at a $6,000 loss. The current assets were received in cash. The other assets were written off. So how I normally start with this is I'm gonna, hopefully this isn't too sloppy. I'm gonna have to be kind of scrolling back and forth, but I like to start with the T accounts for cash and the capital. So in this case we had 17,000 cash. Ryan's capital is 10, Peter's is 10, and James is 2. And of course I could list those other T accounts as well, but for the sake of space and stuff I'm not going to do that. And so with liquidation of a partnership, what we're basically trying to do is, get rid of the balance sheet. We're going to liquidate all of the assets, we're going to pay off our liabilities, and we're going to return the remaining capital investment to the owners. And so we might as well kind of start with that process. So I'm going to sort of go through the steps that the exam did, and I'm going to write out the journal entries. So I'm going to leave myself a little bit of room up there in case I need that. So the first one was, it says we collected all the accounts receivable. So accounts receivable was 21,000. So we debit cash for 21,000 and credit AR for 21,000. So the AR is now gone and cash has been increased by 21,000. The second thing we did is we sold our property, plant, and equipment at a loss of 6,000. Okay, so let me maybe write that one here for the sake of space. Alright, so the book value, I'm sorry, I'm probably going to have to keep going back and forth here. I hope that's not confusing to anyone. The book value of the property, plant, and equipment is 15,000. If we sold it at a $6,000 loss, that means we sold it for $9,000. So I'm going to debit cash for $9,000. I'm going to credit the furniture and equipment, and for the, I guess to spell this kind of out, I'll credit for 5,000 and the equipment was 10,000. And we know we have a loss of 6,000. So that's the journal entry to do that. Now I think I've got some room over here, and so I'm going to fit this in, I hope. I could have done this all in one journal entry, by the way, but now I'm going to get rid of that loss. And the loss, because that affects income, is distributed to the owners, the partners. And so I'm going to credit the loss for 6,000, and I'm going to debit what was it, Ryan, Peter, and James. Now they split profits and loss 3 to 2 to 1. So the way that you would figure that out is you would take 3 to 1, that is a total of 6, and then divide that. 3/6, 2/6, 1/6. And that would be the percentage of all profit and losses that each partner would get. 3/6, 2/6, 1/6. So 3/6 is half, so Ryan would absorb 3,000 of the $6,000 loss. 2/6 is 2,000, and 1/6 is 1,000. And that journal entry, of course, is in balance. We'll reference this again in a second, but I need the room. Okay, so because I'm keeping track of that capital, I'm going to go up and I'm going to post that. So Ryan's capital is reduced 3,000. Peter's capital is reduced 2,000. Oops, I didn't write that in there. And James' capital is reduced 1,000. Alright, the fourth journal entry that I'm going to do, it says that all other assets were worthless. Well, that basically means we had a loss. Another way to think of it is it's just this journal entry here, right? We debit cash for 0. We credit other assets for their value, which was 9,000. And so we need a loss of 9,000. Of course, we don't debit cash for 0, so let's just get that out of there. But that's the idea, right? They're worthless, so we write them off, so it's a loss of 9,000. Well, what do we do with that loss? We do the same thing we did over here. So R capital is going to be debited, P capital is going to be debited, J capital is going to be debited, and the loss is going to be credited for 9,000. Now you're probably picking up that in fact I could have consolidated some of these journal entries, right? I could have done journal entry 3 right in here with number 2. But and that's probably how we do it in real life, but I wanted you to see the steps that we're going through here, so I'm kind of adding some extra journal entries to see that step by step. So again, this is split 3 to 2 to 1. So 3/6 of the 9,000 is 4,500. 2/6 is 3,000, and 1/6 is 1,500. So I'm going to go post those to their capital accounts. Debit 4,500, debit 3,000, and debit 1,500. All right, good. And by the way, at this point, our assets, except for cash, are now 0. All assets, the accounts receivable is gone, the furniture is gone, the equipment is gone, and the other assets are gone from our books. And cash has a new balance of 40. Nope. I think I misposted something here. Let me get rid of that. I got a little excited. I never posted this cash. That was a mistake. I'm sorry about that. I hope that didn't throw anybody off for a while. So that cash should have been debited. So now I'm all up to date here. So I add all that up, and all of these assets are gone, and cash is now 4,700. Okay, so and these balances, of course, have changed as well. They're what we have here, which is, by the way, 2,500, 5,000, and a debit balance of 500. All right, probably we have enough information to actually answer this question, but we're going to keep doing the liquidation. So the sixth journal entry in this case would be we're going to pay off our liabilities, and our liabilities are accounts payable and other liabilities. So I debit accounts payable for 15,000. I credit other liabilities for 25,000. I'm sorry, I debit other liabilities for 25,000, and I credit cash for 40,000. All right, I post that. cash now has a balance of $7,000. The liabilities are now gone. And the only thing that remains is $2,500 for Ryan, $5,000 for Peter, and James has a deficit of $500. And so, by the way, that 7,000 equals this 7,000. Right? And so the final journal entry would be journal entry number 7. And that might require James to contribute $500 to make this balance, which I believe was the question. Let me see if I can pull up the question here. James argues that he should receive a portion of the remaining cash, but Peter and Ryan argue otherwise. How much cash should he receive or pay? Well, he should receive nothing, right? He's not entitled to any of that, or in fact, he really should owe. $500. Okay, I hope that helps.